To address the issues of the financial crisis that resulted in too many privatisations of profits and socialisations of losses, the European Federation of Financial Services Users wrote the Better Finance Manifesto, outlining necessary changes to benefit the real economy. The manifesto was officially presented at the Better Finance Conference hosted by MEP Pervenche Berès at the European Parliament.
I thought it was extremely interesting. I've always thought there needs to be much more presence in the legislative process of the consumer and the investor, the man in the street, and it's often been too much lacking. So I think it was great to hear the strength of feeling, and the number of people who turned up today was very impressive.
I found it a very successful conference because there are many different views, but also clear unanimity on certain issues. And the main point is that the consumers and the shareholders have to be served better.
Well, I think we have a rather good political support with some parliament members. Some issues are very supportive, some issues are less supportive. That's our role, to try to convince them to be more supportive and to follow our recommendation.
A heated debate ensued when representatives from different European political groups showed their true colors in a panel on the priorities for the next 5 years. This was followed by a moderated Q&A session with an audience keen to find out what to expect in terms of financial legislation in the coming years. Whereas there were divergent views on some of these key financial issues, nearly all agreed that it is now time for EU politicians and regulators to shift from the existing focus on financial stability to a new focus on fairness.
The economic and financial crisis has affected the ability of the financial sector to channel funds to the real economy, and in particular to long-term investment.
Alors je connais l'argument du commissaire qui est de dire il fallait bien éteindre le feu avant de reconstruire la maison. Mon inquiétude est que parfois, pour reconstruire la maison, il faudra reconstruire la façon dont on a éteint le feu sur certains dossiers. Avant de nous engager avec la lance à incendie, nous regardions comment nous voulions ensuite reconstruire la maison.
The basic thrust of action the last few years has been the protection of large-scale institutional creditors. And if consumers have to take a second seat versus those guys, no problem. Because, of course, it's assumed that if you protect the big ones, the small ones will benefit. But that, of course, is a bit misleading.
Luckily, we have now MiFID in place. Well, nearly in place. It's nearly fully agreed. We hope that we will get PRIPS. But indeed, it's very important that Europe moves on investor protection because it's important and an essential element of a stable financial system.
In March 2013, the European Commission stated that households are the main source of funds to finance investments, and in order to achieve this, the European authorities must restore confidence in the financial system.
There seems to be a sufficient level of household savings available. What remains is to steer this funding either through direct markets or institutional investors to the financing of the real economy.
The problem is households, they have lost confidence, they are sold packaged products which are often not performing. So we need to look out that households can invest again in the long term and in products providing a decent return.
We'll have to develop and expand funding models with instruments like project bonds, public-private partnerships, and better managed and more transparent securitization.
260 billion is available, 240 billion is just on deposit, or it's not being used actively. And I think what will need to happen is to encourage to use these savings actively, and that will stimulate the growth.
In modern economy, the growth is driven by innovation, so you have to have knowledge and education.
It is very important for households to invest in the EU companies because it's important to reinforce the link between the civil society and those companies in order that people be more close to their company, and that's a question of the shareholders' engagement in all the companies.
And what we need is more credits for our industry, and especially small and medium-sized companies. When there is too much regulation, well, they stop doing anything. And who is interested in that?
Should banks finally be allowed to fail, or should public money be made available to recapitalize them?
Governments cannot intervene in failing banks because ultimately it's a company and a company needs to manage itself.
If they make a mistake, if they end up going bankrupt, I'm afraid it's the household, it's the man in the street who ends up paying.
We think for the failed banks, the top management is responsible. They have to pay, they have to disgorge their huge bonuses. So why is it always the victims that have to pay and not the people who are responsible for this mess?
If they want to play casino, fine. But the discipline of the casino is heads you win, tails you lose. You lose, not someone else, not the taxpayer, you.
Many stakeholders at the conference voiced their concerns on the issue of the financial transaction tax, arguing that retail investors will bear the bulk of it instead of large financial institutions.
In many instances, the financial tax will be pushed on to the end investor, and that is probably not the aim of it.
Especially should cover trading activities like high-frequency trading activities, what we call the casino society, but it doesn't have to cover the end investment in a company because then it will miss its first objective.
Better Finance for All is pleased to see that shoring up of the real economy by engaging in the protection of savers and investors, concentrating on long-term investment for job creation, and improving corporate governance are issues that are at last coming off the back burner.